Hey team, I want to talk about the pros and cons of NFT marketplaces, OpenSea versus LooksRare, strengths, weaknesses, which one you should use. I also want to look at the broader ecosystem and what's happening in the space right now, some challenges, long-term challenges that the space is and will continue to have for a while. But first, let me take a few seconds to ask, how are you doing? You hanging in there, bud? It's brutal right now. Every chart is red. From all-time highs, Bitcoin is down over 44%, ETH down 43%, Solana down 52%, Cardano 61% down. I'm filming this on a Friday, we'll upload on Sunday, and I'm really hoping the whole world doesn't turn upside down before then. If you're new to crypto investing, welcome to the pain. You'll get used to it. We've been here before many times. Everyone says you shouldn't invest more than you're willing to lose. They are right, but I will rephrase. You shouldn't invest more than you're willing to live without for a long time. Because while it's invested, you can't do anything else with your investment. Even with great investments, you have to live without it for a long while. So hopefully you're not underwater right now. You don't need that investment. And if you are, and you do, I'm sorry. Please remember this for next time. Also remember, Baron Rothschild, the 18th century British nobleman and member of the Rothschild banking family, is credited with saying, "The time to buy is when there's blood in the streets, even if the blood is your own." My friends, there is blood in the streets today, right now. So act accordingly. I'm not selling. Okay, to the topic at hand, OpenSea versus LooksRare. The whole reason we're talking about this today is because of what happened to OpenSea last week. The service went down twice. People couldn't access the API to detect or display NFTs, let alone use the site to buy or sell NFTs. Users were understandably unhappy, especially since OpenSea raised $300 million in Series C funding recently, seeing its valuation soar to $13.3 billion, and then it broke twice. The timing was also interesting because competing NFT marketplace LooksRare just went live to the public on January 10th. And when OpenSea was down, a flood of new people headed over to the competition. Let's look at each service, why you might prefer one or the other, and what all this means for the broader ecosystem. First, the champ, OpenSea. OpenSea is the talk of the Web3 town over the past year, but it was founded in 2017, back in the prehistory dawn of NFTs. This is when CryptoKitties and CryptoPunks and even Mooncats were minted. If you've heard of them, they have a fascinating story. Maybe we'll go into that in another video. OpenSea went through Y Combinator, they got some pre-seed funding from them, and they've consistently raised more since then from names like Animoca Brands and Andreessen Horowitz. And of course, as NFTs have exploded in the past year, OpenSea has been at the front of it all. They were earlier, they were better funded, they're the clear frontrunner to make all of this NFT business actually work. But being the frontrunner doesn't always make you popular. They've been criticized for being unresponsive to customer service requests, glitchy collections, taking projects down with little or no explanation, rampant piracy of creative IP, hosting scam projects, and more. But now there are competitors like LooksRare. LooksRare was in beta through the end of last year, and like we said, launched publicly on January 10th. They're trying to set themselves apart by offering, frankly, a lot of stuff that isn't available on OpenSea. For starters, users get rewarded with Looks tokens for simply using the service. You make a trade, get the NFTs or crypto you want, and get Looks as the cherry on top. Very nice. They also reward staking Looks tokens. Private sales have no fees, but all public trades incur a 2% fee. That's lower than OpenSea, by the way. And that fee goes straight to the Looks stakers, and NFT sellers get paid immediately. They're also just trying to make the experience more user-friendly. You can make a bid on a whole collection, so if any piece in that collection is available at your asking price, you can get it without bidding individually on every piece. They're also planning to release a feature called trait offers, so you can bid on multiple NFTs that have a certain trait. They're also doing multi-cancellation, so you can cancel multiple orders all at once. All around, they're giving users better management tools. LooksRare also did an airdrop of Looks tokens for all OpenSea users who had traded more than 3 ETH in the prior months. It was about 12% of their token supply. Pretty bold move, if you ask me, and not something that OpenSea could ever duplicate. They don't have a token, and it really generated buzz. Lots of people went to check out LooksRare and use their airdropped tokens. But there's something of an open lie amongst LooksRare users and everybody at this point. They have way higher trade volume than OpenSea. LooksRare's total trading volume at this writing is $5.7 billion US since launch just a couple weeks ago, while OpenSea has seen $2.1 billion in total trading volume. LooksRare has beaten OpenSea on trading volume every day since launch, though that might be ending soon. Sounds great, right? Except many have noted that LooksRare is rife with wash trading, or trading that's just moving back and forth between two or more coordinating addresses. Hint, this is the same person. Traders are doing this to game the rewards model on LooksRare to get more Looks tokens, and it looks like LooksRare is totally okay with it. They're letting it happen because it bolsters their metrics and gets them press, even if closer analysis shows the numbers are totally inflated. It's not a good look, guys. So, which should you use? Well, why not both? From their site, the LooksRare marketplace indexes all NFT collections on the Ethereum blockchain. That means you can trade all the Ethereum NFTs that are available on OpenSea and some that aren't. The only catch is you have to manually list them on LooksRare. Now, to the broader view. You know what OpenSea's situation reminds me of? Coinbase. Coinbase made it easy for people to buy and sell fungible tokens. OpenSea is doing that for non-fungible tokens. You don't have to like Coinbase to acknowledge that they've done very well for themselves, and some of their most active users are also their most vocal critics. Coinbase launched in 2012, and before their IPO in April 2021, the site was reliably unreliable. Whenever there was a market surge, Coinbase went down like clockwork. When everybody was excited to buy or sell their crypto, that's when it became the most impossible to buy or sell their crypto. You wouldn't ever get customer support. People got cleaned out by scammers. It's all the same stuff. That tells me two things. First, if Coinbase is to fungible tokens what OpenSea is to non-fungible tokens, it seems like OpenSea will probably maintain their dominance in the space. Second, everything we're describing, sites going down, services going out, censorship, all the criticism of OpenSea, this is the failing of a centralized service. In centralized services, increased load stresses and breaks the service. That's what happened to Coinbase. That's what happened to Twitter. Do you remember the fail whale? And that's what's happening to OpenSea now. We shouldn't be surprised by any of this. We have seen it all before. But should we be okay with that? It is what it is, I guess. That's how the internet works today. But it's not what the decentralized web is supposed to look like. The founder of privacy-focused messaging app Signal talked about this recently. Moxie Marlinspike is a real deal cypherpunk. This guy gets privacy and macro network issues. And on January 7th, he published a blog post called My First Impressions of Web3. It's really good, you should read it, but as a basic intro, I'll offer some of his analysis. Marlinspike begins with, despite considering myself a cryptographer, I have not found myself particularly drawn to crypto. That's fair enough. The whole thing started with Bitcoin so many years ago, and it was an ideological crusade to liberate money from the clutches of the state. To crypto's current public image of being a get-rich-quick scheme, I can see why he's not thrilled. There's a lot to unpack in this blog post, and honestly, I really want to dive into it. It's fantastic. He mints some weird NFTs. He does generative NFTs that are interactive and constantly evolving. He does some that look differently depending on where you're viewing them, whether it's on OpenSea or Rarible, and he's demonstrating some really interesting points. You definitely should read it. But to the point at hand, Marlinspike shows very clearly that the supposedly decentralized web is anything but decentralized. Everybody uses the OpenSea API. So if something happens to OpenSea, then nobody can engage with NFTs. And when all services and tools default to OpenSea to do anything with NFTs, then that's a single point of failure. Mind you, he posted this on January 7th, 12 days before OpenSea went down, and then went down again the next day. Marlinspike is right. OpenSea isn't decentralized. It is very centralized. I'm glad to see up-and-comers like LooksRare, but honestly, this is not really Web3. It's Web 2.0 2.0. It's not user-owned or controlled. It's just as centralized as Facebook or Twitter or YouTube for that matter, or any of the social web. And people typically have a really conflicted relationship with those services. There's much more that can and should be said about the vision of Web3 as a democratized and decentralized liberator versus the present reality of a manipulated, centralized, dangerous, get-rich-quick scheme. Suffice it to say, there is still a lot of work to do. That's what I got. What do you guys think? What do you want to focus on next? Should we talk about price action? Do you want to hear a breakdown of project fundamentals? Do you want to hear the latest news? Should we just do a live stream? I can barely keep up with this stuff. Maybe we should just have a real-time conversation. I don't know. Let me know what you think down in the comments, and we will get to it in a future video. Thanks, everybody.